Hello. So in this part of our revision series, that is the CIPS Level 3 Module 2, which is Ethical Procurement. The idea is to put you in a position to explain how to use techniques to obtain supplies to the purchaser's requirements. And this is actually the first of the, it falls under the first learning outcome, okay? The outcome 1 of that particular module, that is L3 Module 2. And what you're revising here is the first assessment criteria. So this is the first assessment criteria. So if you look at your syllabus, there's a learning outcome, okay? And then there are various assessment criteria in each learning outcome. And our learning outcome 1 requires you to know techniques that can achieve added value and its contribution to organizational success. And again, I'll just point out, this is, as I said, a revision series. It's not a lecture video, okay? There are those ones which, if you're interested in, just let me know. So this is a revision series. Our focus here is looking at questions from various indicative contents, okay? Questions and answers and why those answers are right. And that way, if they set some version of those questions, at least, okay, you are aware of what you're supposed to know and the sort of questions that you're supposed to, rather, how those questions tend to look like in your exams. So just a quick one, okay? If you are not part of Zerite Network email, okay, the mailing list, make sure you do. Make sure you join our mailing list. Why? Because look, every week we do put out content which can be in the form of videos, summary notes, okay, practice questions and answers. I mean, all those ones, as well as the courses that we have that you can access, okay? So every week you get something, and we also put out content on general business, business content, okay? Business content revolving around procurement and stuff, supply chain. So make sure you join that. Now, what are we going to look at in this case? Basically, the questions that you're going to look at will revolve around, or I will put you in a position to define sources of added value, define value for money, apply the 5 rights of procurement of both product and service, as well as discuss the concept of lifetime cost. And so let's get started. And to start us off, let's look at defining sources of value for money. Now, the point here, the point of that as you revise, okay, as you study, is that you should not just be in a position to know what value is, but you should also be in a position to know how procurement can help with value addition or added value. That is important. That's an area that is going to be tested. Those are some of the areas that are going to be tested. Added value, value addition, things of that nature. And value is the extent to which a product or service supplied to a customer meets their requirements. And that's kind of relative, because what one customer will find valuable is not going to be the same thing that another customer finds valuable. It's just like this video, okay? I mean, somebody's going to watch these and then be like, okay, 1 minute I'm out. And then there's another person who's like all the way and like, where's another version of? So the point is, value kind of, it will vary from one customer to the other. Value can be assessed by how much the customer is willing to pay, okay? Value is about meeting the exact needs of the individuals or organization at the time at which they are required. Now, again, as I said, these are question and answer. It's a revision series. So let's look at some of the questions that fall under this category. And so to start us off, we are looking at questions testing if you know what value and added value is all about. That's pretty much our starting point in this case. So, okay, looking at value and what value is all about. And the first question, which of the following best describes what value means from a procurement and supply perspective? Now, is it the cheapest available product that can be procured? What do you think? Is it the most expensive product with premium features? I mean, the premium kind of look valuable, right? Is it the balance of cost, quality, and benefits over the life cycle of a purchase? Is it the quickest delivery option? And so with value, we're talking about balancing, obviously, we're talking about balancing cost, quality, and benefit. Because benefits are what the customer is going to be paying for anyway, okay? Cost of making that thing, the quality, all these things add value, yes? And throughout the life or the life cycle of the purchase. So the best answer there, given the choices, is C. So that's just an example of a question that, test on that. Now, the other question, okay, seems series of questions, right? And by the way, at any point as you're going through this, if there is a question that you think, I need more explanation on that, just comment there, okay? Just say this question under this particular, topic. Like if it was questions testing value and value addition, question 2, because there are a lot of questions, right? So let's move on. Question 2, value for money is one of the procurement department's objective, okay? Value for money is one of the procurement department's objectives. Which of the following gives a best, so that's the key thing, okay? A best definition of the concept value for money. Normally, if a question has this sort of thing, it means all those answers are probably going to look like if they are true, but then we are looking at the best. So a best, okay, value for money. Is it spending the least amount of money possible? I mean, sometimes, yes, you want to save money, but it doesn't really mean that if you spend the least amount of money, okay, possible, then you're getting value for money. Not really. Is it maximizing benefits relative to cost over time? Is it choosing the highest quality product available? I mean, you're probably like, yeah, I'm going with a designer. So if it's a designer product, I'm choosing, yeah, okay, look. Is it selecting suppliers based on their reputation? Not really. It's just maximizing best, okay? Just maximizing benefits relative to cost over time. So that's that, all right? In that case, the answer is B. Now, number 3. Another, this is a bit practical. So in this case, what are we looking at? Okay, Jane has attended a procurement interview in which she has been asked to explain how a procurement professional can demonstrate value in their function. So what is that? Okay, like how can a procurement, I mean, yes, do you know what value is? Yep. Can you show our procurement person can actually demonstrate? So just asking you to talk about value from a practical perspective as opposed to from a theoretical perspective. So anyway, so Jen has attended a procurement interview in which she has been asked to explain how a procurement professional can demonstrate value in their function. Which of the following answers is correct? Well, by always negotiating lower prices, right? I mean, that will help the organization to get value. By ensuring suppliers deliver on time, by aligning purchases with strategic objectives, and demonstrating life cycle cost benefits. By favoring suppliers with the lowest price during tender, I mean, you might say if you're evaluating tenders, don't you just look at the supplier who has the lowest price? No, the answer is C, okay? I mean, this is the best. By aligning purchase with strategic objectives, okay, purchases with strategic objectives, and demonstrating life cycle cost benefits. So number 4, which of the following is a good example of how you can deliver value through sustainable procurement? Sustainability is, again, there are those environmental, social, governance, sustainability, the ESGs, okay? So sustainability is one of those things that is a big deal in procurement. And if you look at even the changes in the syllabus, right? Like module 4, there are some changes, and I think some aspects of level 5. I mean, not module 4, level 4, level 5. And one of the things that became obvious in those changes was introduction of lots of concept testing on sustainability. So this question is just about sustainability, right? So what is it all about? Now, this level 3, it's not level 4, but I'm just saying sustainability has become a big deal in CIPS. And so in this case, which of the following is a good example of how you can deliver value through sustainable procurement? A, choosing the lowest price supplier, selecting supplier with environmentally, look, reducing supplier lead times, nope, okay, by using air freight. Yeah, so lead time just means they deliver faster, but is it sustainable? Negotiating bulk discounts without, that one is just, so the answer is selecting B, okay? So selecting a supplier with environmentally friendly practices. It's right there in the answer. So anyway, look, as we continue, if you have any question you ask, you don't just sit there with your question. And again, remember, there are tutorials. This is a revision series. And there are questions that you're supposed to also look at after you are done with these ones. Okay, so there are those ones that you test, you conduct, or rather you take to test yourself. All right, so let's move on. And the next question, and in this case, question 5, what does added value in procurement and supply generally refers to? So in this case, actually, you're just testing definition, right? So added value in procurement, what does it mean? Or in procurement and supply? Does it refer to increasing the cost of a product to guarantee profits for the organization? I mean, we are adding value to a profit. Does it mean enhancing the utility, efficiency, or benefits of a product or service beyond its basic function? Is it reducing the quality of a product to make it more affordable, hence increase your market share? Does it mean eliminating features to reduce complexity, to make the product simple and easier to use? Actually, it's just enhancing the utility, efficiency, or benefits of a product or service beyond its basic function. So that way, there is more to that product than what the buyer just, like more to the product than the basic function. And another one, question 6. So again, another practical question there, right? So look, some of these questions are going to be, first of all, these are all object-oriented sort of question where you just click, point or drag an answer there. What is it called? They come with multiple choices, okay? So what was I saying? Yeah, I was saying some of these questions could be straight up just what is this particular thing, and that's it, okay? And then some of them can be a practical scenario that you're supposed to understand to deduce an answer from that practical scenario. Like in this case, we're talking about an actual situation that is happening, as opposed to which of the following explains blah blah blah. So what are we looking at here? We are told that Alice is negotiating a contract for supply of raw materials for her manufacturing business. So she has a business, okay? She needs raw material. Which of the following is an example of added value in the contract? See, that's interesting, okay? Normally when you talk about added value, you're talking about added value from buyer, from seller. I mean, but now you're saying you're getting into this contract, right? What exactly about this contract? What feature or what item in this contract points towards added value or value addition? So let's look at the answer. So what do you have? A, fixed terms without flexibility that allows for certainty in budgeting. I mean, is that an added value when you say, look, if these terms can't change and the amount is this much and therefore that makes it easier for you to budget? Is it penalty for non-performance only? Is it incentives for meeting or exceeding key performance indicators? Is it minimal supply engagement? Well, it is the incentives for meeting or exceeding KPIs. So you're saying, look, if you're supposed to produce 1, 2, 3 by, say, this particular day, okay, day Y, and then you've done it before Y, okay, then you get ABC. So you get an incentive for faster delivery. See, that's value addition in the contract, right? So the incentives in contracts are just an example of adding value. Now, number seven, a construction company decided to go for a slightly more expensive cement because it has better durability and reduces maintenance cost over time. So durability and that. What type of value is being prioritized in this case? Because definitely there's some value to that. So the value could be, which one? Is it initial cost saving? Okay. I mean, are we saving money? We are told expensive. So there's nothing like saving money initially. Long-term value through life cycle, cost benefits, speedy delivery. I mean, no one has mentioned that. Short-term project goal. So the point is, yeah, I mean, in the long term, we are going to have some benefits. That's pretty much what we are going for in that particular situation. So yeah, those are questions that simply, I mean, the idea behind those questions is just we are testing. Do you know what values are? Okay, in terms of procurement and supply. When you talk about value addition, do you understand what we're talking about or not? Right. So that's what the question is testing. Can you give an example of value addition? Can you point in a given agreement that this one is value added and this isn't, right? So you see, those questions are testing that. I mean, look, if you don't like reading, it's like I don't read, it's just, this is still helping you, but I'll still insist to make sure you read, right? Or at least check some of those tutorial videos on all of this. But now you understand that. So let's move on to the other thing that this particular part of your module, this assessment criteria, is going to be testing you on. Now, apart from those specific questions regarding value, okay, we can also have general questions, okay? When we're talking about sources of added value, we can have general questions that will test your skills on whether you understand things like reducing input costs, since that is an example of added value, okay? Developing a strong brand. Strong brand is also an example of value addition, because think about it, right? If you're buying electronics, sometimes you just go and say, I want to buy a camera, and then you're like, I have a choice. Is it Nikon? Is it Canon? Is it Sony? And then sometimes you just make a decision based on how your feelings towards the brand. Okay, I'm mean, like features, and then I just settle for this brand. So brand can, if a company works hard on their brand, then that can also become part of value addition. So questions can test you on that. You can have questions testing you on things like having extra features on a product, okay, offering customers convenience like free delivery. All those are just examples of value addition. So in addition to testing, do you know what value is? Do you know what value addition is? Or even added value? They can actually test you on specific examples of value addition or added value. So in that case, you could end up with questions that look like this. So in this case, general questions on sources of added value. And for example, question 1. After a meeting on value creation, I mean, by now you know that some of these questions are going to be practical, right? So after a meeting on value creation, a company decides to improve on its product design by making it user-friendly and more aesthetically pleasing, which is just a fancy of saying good looking. What source of added value is shown in this move? By, this product design to make it more user-friendly and make it beautiful or good looking, whatever. So, yeah, they're adding value, but what source of added value is shown in this move? Is it cost reduction? Is it streamlining operations? Is it supplier collaboration? Or is it enhanced customer experience? Which that is what that is. It's enhanced customer experience, okay? That's the thing. They're trying to make the experience more pleasing for the customer. And so that's the value. So sometimes that's what you do with value addition. You just make sure that your product is beautiful. Just make sure that your product is, it looks nice enough for the customer to enjoy. It's like when you download an app and then you say that app interface is not user friendly. You're not complaining about what the app does. You're just complaining about the fact that you can't use it. Or, you buy, like those people who have Macs, okay, the Apple computers, and then there are those people who have like Dell, and then you see those people with their Apple computers wiping them, cleaning, and then there's a guy who has HP who doesn't care, like done. So sometimes they just look at that and they say this one looks beautiful because the brand makes it whatever. So that's just a thing. Okay, sometimes just enhancing that user's experience can work as a value. Anyway, let's move on. Let's talk about other questions. And the next question in this case is question 2. As part of added value, a manufacturer decides to shift to renewable energy source. So obviously that's an example of one of those sustainability, environmental. Anyway, let's move on. Okay, so renewable energy, as part of added value, a manufacturer decides to shift to renewable energy sources, hence reducing its carbon footprint. What is the source of added value in this case? Is it ethical sourcing? They're not talking about asking suppliers who have those ones. Environmental sustainability, cost reduction, improved delivery speed. No one even talk. They're just going for sustainability. Okay, so the answer here is environmental sustainability. That's pretty much what that question is testing you on. All right, it's one of those ESG sort of questions. And number 3, a coffee shop creates a loyalty program that rewards frequent customers with discounts and free items. What source of added value is this an example of? Improved product quality? Nope. they're just rewarding customers, right? So this one has to do with customers. So supply chain optimization, not really. Customer retention, definitely they're trying to retain the customers. Look, so these are the answer here is just that, okay? The answer is customer retention initiatives. So those are just examples of questions that testing. Okay, yeah, you say you know what value addition is. Okay. If we tweak these questions so that they specifically test specific sources of value addition, can you point out what those are? I mean, that's pretty much what is going on there. And these are some of the things that you get in our list if you're part of it, right? Because tend to set these questions based on topics. So you just don't jumble them up, okay? I mean, it's revision at this point. So the idea is for you to look at this topic and say, okay, well, I don't get that topic, or rather I've just studied it and I think I understand it. Here are the questions testing whether they understand it or not. So that's pretty much what you're doing here, right? So let's move on. And at any given point, remember, if you have a question, you ask. You don't sit there with your question. Let's move on to the next one. Now you have to remember that value added from a monetary perspective means understanding costs that contribute towards total costs. And we're talking about total costs. So anytime you're talking about costs, there's always the question of, can we control this cost? So that means you also need to understand how reducing, okay, input costs can help with value addition. And that will mean looking at questions on costs that contribute towards total costs. And the point here is that as a procurement professional, okay, as a procurement officer, you're going to be managing costs from from four point of views, okay? So there's going to be fixed costs, there's going to be variable costs, since those ones will give you the total cost of what is being produced. But then that cost can also be looked at in terms of direct cost and variable cost. And one, you need to know those costs. Two, you need to know how those costs, reducing them, okay, or the general working of those costs, how do they contribute towards value addition? So these are questions testing you on that. And that means looking at questions on costs that contribute towards the total costs, okay? So costs that contribute towards the total costs. So in this case, we have questions like, a manufacturing company spends $20,000 monthly on a warehouse rent, regardless of product levels. What type of cost? See, it doesn't just ask you to identify cost. What type of cost is this? And is it a fixed cost? Is it a variable cost? Is it direct? Is it indirect? Look, rent in a warehouse, irrespective of whether they produce, that becomes a fixed cost. What is a fixed cost? These are costs that doesn't change with the level of production. So if that's the graph, all right, which is, I need to just do a clean one here. So if that is the graph, okay, that's the graph we are dealing with. So if we are producing, this is the cost we incur versus the production level. So if you produce at the cost 1, 2, 3, or point A, point B, point C, irrespective of where our production level is, our rent cost is just going to be the same. That is fixed cost. So fixed costs are the sort of costs that don't change with the level of production. And that is something that you need to know. Now, assuming you own a clothing, okay? Assuming you own a clothing manufacturing business, and which of the following is an example of a variable cost you are likely to incur? Now, the first thing you need to understand is that when we talk about variable cost, VCs, okay? So variable costs, fixed costs, we know they don't change with the level of production. You produce, you incur the same cost. Variable costs do change with the level of production. The more you produce, the more you incur these costs. And then, therefore, that means in this question, okay, which of the following is an example of variable costs you are likely to incur in your clothing manufacturing business? And so is it monthly rent? We know that's a fixed one. Wages paid to the sewing machine operators based on hours they work. The more hours they work, the more you pay them. And so that's the variable cost, because insurance costs, insurance premiums tend to be fixed. Salaries for the admin, salaries tend to be fixed. So the answer here is B. Now, a bakery buys flour and sugar for $500 per batch of bread that, they make, right? So how would this cost be categorized? So if they're making bread, it means flour and sugar is direct ingredient. And so that means there is a direct cost. Okay? So that's a direct cost. So direct costs are just the costs that are directly incurred in whatever is being produced, while indirect costs are the costs that are not directly incurred in whatever is being produced. So that is what makes that one a direct cost as opposed to fixed cost. So direct. An IT company incurs $15,000 annually for licensing a software that supports all its projects. Which of the following best describe that cost? That is an interesting one. Okay, so that is an interesting one because we are saying they're using a software. They're paying every year for that software. That makes it fixed cost. But the software supports all of its project. Now, all of the company's projects are not going to be directly related to a particular thing being produced because who knows, maybe that software supports the people in the accounting, maybe it supports the people. So the point here is that question is testing whether you understand both fixed, variable, direct, and indirect. So we know that 15,000, okay, per year is fixed, which means any question that has variable doesn't matter. So the choice is just between this and that. So which one is it? It's going to be a fixed cost and an indirect cost. Why is it a fixed cost? Because it's an IT company, okay, and the software, the cost of the software is fixed. But then that software will do other things. And so those other things are going to be indirect. I mean, yeah. So we have questions that can ask you to identify direct cost, indirect, fixed, variable, or one question that just wants you to identify two of those ones, like that one. So again, look, if there is any question, you ask. And with that, we move on to the next one. So what is the next? Well, the next question that requires you to understand how added value can be gained by reducing input costs. Remember, the whole point here was, yes, we have costs. Okay? But then, can you reduce these costs? Because that's a thing. Like, cost reduction is always important. So if we can reduce this cost, then we can gain. So which sort of questions are we talking about here? Because again, look, I'll insist, inputs are important in whatever is being produced. But sometimes you just want to add value from a financial perspective, okay? Value to your finance department, value to your... Because in organization, there's always going to be the finance, marketing, and the operations. So if you can finance the operations at a cheaper cost but still get the quality you want, see, that's part of value addition. So in this case, anyway, by reducing cost. So in this case, John is negotiating a bulk purchase of raw materials with a supplier. Good. He manages to secure 15% discount on the purchases. How has John achieved added value in this scenario? By improving supplier relationship, they just sold something to you at a cheaper price. So trust me, it's not about improved relationship at that point, okay? By decreasing variable cost and improving margins, by increasing customer satisfaction, you are the customer. So did you just increase your own satisfaction? That's supplier's job, okay? By focusing on speed, well, this question is about discount, it's not about speed. So the answer is by decreasing, okay? By decreasing variable, by decreasing variable cost and improving margins, because raw materials are part of whatever you're using to make whatever you're making. So the cost you incur in raw materials, that's going to be a variable cost, okay? And so you've reduced that, and you've also improved your profit margins because you've spent less by 15%, and that means more money. Okay, 15% more in terms of profit. Now, well, it's not that linear, but you get the point. Question 2. A car manufacturing company acquires an automated machine that reduces the labor required for assembly. Which cost is going to be reduced by this investment? So definitely, if you're talking about labor, okay, for assembly. Then the question is, what is labor cost in this situation? So labor, the more it's assembly, right? So the more you assemble, the more labor you require. And so that makes it a variable cost. Okay? Get that? It's not indirect because it's not fixed because I'm talking about salaries here. Okay? And the fact that the number goes up with the amount of people who are doing the assembly means it's variable. It's not indirect because this will directly deal with whatever it is that we are assembling. It's not a sunk cost. Sunk cost is just a foregone cost. It's a fancy way of saying cost that you can't get back. It's gone. Now, question 3. A tech company negotiates a longer payment term with suppliers, okay, improving cash flow and reducing financing costs. What kind of value is added? Okay, a tech company negotiates a longer payment term with suppliers, improving cash flow and reducing financing costs. So whatever value you're dealing with here has to be financial in nature. So that's a financial value. That's the thing. That's the value you're getting from that particular transaction. So that's the thing. I mean, when I talk about costs, first you need to identify to be in a position to know what these costs are as you're continuing with your ethical procurement, that is L3M2, right? So in this case, as you're studying at this point, okay, and a source of added value. We're talking about costs. One, what are these costs? Direct, indirect, fixed, variable. Okay, good. So what are we doing here? We are trying to control these costs. We're trying to manage them. And reduction is one of the ways we manage these. So under cost reduction, how do we gain by doing that? And then you point out to that. So the questions can either ask you to identify this cost, or the questions can just ask you to show how any movement or any management of that cost, what value is that resulting into? So if there is any question, again, as always, you ask, and let's move on. Now, before we jump into the next question, I just again want to remind you that if you like this sort of thing, okay, and you also just want convenience, right? So these things to be sent to your email, like on weekly basis, you get practice exercise, you get summary notes, okay, PDFs, videos in your email, right? Make sure you join our newsletter, the Zerite Network newsletter. You can access it through the description, okay? So then you become part of our, mail list, okay? So you get frequent, practice exercises and things of that nature, tutorials on various things, not just exams, okay? Business ideas, tips, and all that stuff sent to you to your email. Now, let's move on. Let's continue with the next thing. The 5 rights of procurement of product and services. The 5 rights is a big deal in procurement. It's one of those things that you must, okay? You must know. The idea is that whenever you're buying something, procuring, okay, then the question is always going to be, is this thing of the right quality? Is it of the right quantity, whatever we are buying? Are we buying it at the right price, okay? Is it being delivered to the right place, right? That's why we want the supplier to take it to the right place. Also, are they delivering it at the right time? So the right quality, the right quantity, the right, okay, price, the right, okay, let me say that again. The right quality, whatever you're buying, right quantity, okay? Is it being bought at the right price, okay? Delivered to the right place at the right time. And so those are the right, the 5 rights. And in this case, questions, okay? So the questions in this point are going to be something like questions testing your understanding of the 5 rights of procurement of products and services. And in this case, we have the obvious one, okay? What does right quantity in procurement aim to prevent? We're talking about buying something at the right quantity. Why? Because what are we preventing? We are preventing, is it excessive stock level? Is it late delivery? Is it understocking or stockouts? Is it poor quality? So at this point, we are more worried about understocking and overstocking, okay? Because Yeah, you might say, but excessive stock levels. Yeah, well, see, yeah, that might look like it, but the actual thing, the one that actually makes more sense here is we are more worried about not having those things, right? Because when you're talking about stock, okay, we just want to make sure that we have the right stock. So the right quantity, you're not worried about having a lot of stock. You're worried about not having stock, okay? So either having less stock, or when the customers want whatever they want, then we have no stock. So you're not necessarily worried about overstocking. You're worried about not having them, right? So that is why C makes sense in this scenario, right? I mean, just throw that one in there to confuse you a bit, right? Now, which of the following is an example of a procurement decision involving right price? What? Selecting a supplier with the lowest cost without considering quality? Yeah, well, then you just gain low quality, but yep, you save some money. Choosing a supplier based on long-term partnership? That's a relationship, but what are they bringing on the table? What are they helping you with? Negotiating a price that balances cost with quality and delivery terms? Sure. Ordering products in bulk to secure a discount? Not really. This is just an example of economies of scale, but the right answer is this one, okay? Negotiating a price that balances cost with quality and delivery terms, right? So that's that. Next, a global retailer is looking to source sustainable packaging material for its products. The packaging must meet, okay, strict environmental standards and also be delivered on time for upcoming product launches. Which aspect of 5 rights of procurement is most important to focus on here? So there are two things here, okay? The packaging must meet strict environmental standards and also be delivered on time. So strict environmental standard and also so there's time, okay? But then there is the question of quality. So which one do you think is important? Well, they're both important, but the fact that you say must meet strict gives you an indication that quality is a big deal in this situation. And so that's the big deal. That's important. Okay. And so with that, okay, we can then move on to the next thing. And what is the next thing in this case? The concept of lifetime costing. So lifetime costing is the total anticipated cost of design, procuring, running, and disposing of a fixed asset during its lifetime. The point is for you to know that, yes, you bought something. You bought a product, right? So the question then becomes, okay, yeah, we bought it. How long are we going to keep it? And what are the costs you're going to incur from when you acquired it all the way to when you are done with it? So that's lifetime costing. And this means things like understanding pre-purchase cost, okay, plus item cost, plus operating cost, plus maintenance cost, plus insurance cost, plus disposal cost. That is what gives you total lifetime costs. And from this revision, right? So from the questions, from the exam's perspective, what are some of the questions that fall under this category? And so that means you need to understand questions dealing with things like, okay, here's an example. So let's just look at the questions, right? So we have questions testing you on the concept of lifetime costing. And what do we have? We have, what does lifetime costing in procurement primarily focus on? One, the initial purchase price of a product. Well, the total cost of ownership over the product's entire lifespan, the cost of raw materials used in production, or the cost of inventory. Of course, it's, lifetime. So total cost of ownership over the entire. So B, that's the answer. Number 2, which of the following would be considered an ongoing cost in lifetime costing for a piece of machinery? An ongoing cost. It doesn't stop. Purchase price, yeah, well, we bought it, that's it. Repair price, or repair cost. Warranty cost, disposal cost. So repair, because it's a machine, we're always going to be repairing it. And so the repair cost. If you talk about warranties, well, you buy something, they tell you it has a 1-year warranty, so that means after 1 year, Plus, that's not it. Okay, so it's repair cost. Next, a company, okay, is considering two suppliers for a key component. Supplier A offers a lower price, okay, purchase price, but supplier B offers a longer warranty and lower maintenance cost. So their prices are probably high, but then there is the longer warranty and lower maintenance costs, meaning which concept would help the company to make a more informed decision? So the company is thinking, of these two suppliers, who are we going to be dealing with? And well, if we use just in time, okay, that is inventory management, will that tell us anything about which supplier to go with? No, just in time will just talk about how quickly those things get to you and then you avoid storage costs. That's pretty much it. Lifetime costing, okay, total cost of ownership, break-even analysis just tells you how much you need to produce so that you break even and then make profit. So there you have a problem between B and C. And well, the answer is actually B, lifetime costing. Okay, total cost of ownership is just how much does it cost for you to have that thing, from the idea conception all the way to when that thing got to you. But then there is these other things all the way to disposal. So lifetime costing will help you to decide between those two suppliers. Question 4. Which of the following costs would typically be included in disposal cost of a lifetime costing? Transportation and storage, we are disposing it. Okay, it's disposal. So the answer is obviously environmental fees and recycling costs, because these ones deal with disposal. If you're disposing something and it's destroying the environment, then you know there is that, right? And our final question to sum this up is, what is one key advantage of lifetime costing when purchasing machinery or equipment? Why? Why is it important? Well, because it helps to focus on immediate price reduction? No. Is it because it favors lower quality options with a high initial cost? Well, it's because it allows for a clearer comparison of total ownership cost over time. Right. So there you have it, okay? This, again, I'll repeat. This is a and you know, more videos coming out on this, right? So this is just a revision series. The idea here was you are testing assessment criteria 1, okay, in level 3 module 2, that is ethical procurement. So the first assessment criteria, that is what this revision is all about. I mean, you're going to have lots of questions on the other assessment criteria, like 2, 3, okay, 4, and then 1 of level of learning outcome 2 and all that. So this is the first assessment criteria in learning outcome 1. And then we'll move on to the next one. Look, if you have any question you ask, don't just sit there with your question. And yep, there are other questions that you can test depending on which platform you're watching this from. Okay, so try those other questions. And then, yep, see you in the next video.